Hello everyone, this is Heather and this is going to be our video on what the AlgoFlow tool is, how does it work and how to best use it. So AlgoFlow, this simple line, is a tool that we introduced about a month ago and it has completely revolutionized how our users use options flow to make their trades, and the growth that we have had after we introduced the AlgoFlow tool has just been phenomenal. So it's been one of our marquee tools, and I think it deserves a separate video in itself. So that's what we're going to do in this video. So to start with, let's talk about what AlgoFlow is. So AlgoFlow, this red line, this is our proprietary indicator that works on top of live options flow. So that's important to note. It just works on top of live options flow. So any limitation that options flow has, the AlgoFlow is going to have it as well. And it is a simple line that's charted along with the price that shows a bullish or bearish, or that shows a cumulative sentiment from options traders. So when this line, let's say, is going down, that means that options traders are bearish on the underlying stock, which means they could either be buying a lot of puts or they could be selling a lot of calls. If this line is going straight up, that could mean that options traders are bullish on the stock, which might mean that they're either buying a lot of calls or they might be selling a lot of puts. So that's just sort of the basic understanding of what the AlgoFlow tool is, or what this line represents. There is a lot of filtering and there's sort of a lot of intelligence that goes behind creating this line. It's not just sort of if there's more call buying, the line will go straight up. And that's sort of the secret sauce that we have, and that makes it work so well. But I hope you understand the basic idea. If options traders are bullish, if the data in the live options flow tool is bullish, then this line is supposed to go up, and if it's bearish, then this line is supposed to go down. And the reason we created this indicator, or the reason we created AlgoFlow, is because since options flow or options traders are sometimes ahead of the price because they are smart people, they have a lot of money. And if, let's say, someone is very smart and they're buying a lot of calls while the stock price is going down, they might be expecting the stock price to go back up. And that's useful information for retail traders. Because if a lot of smart people are expecting the stock price to go up, or if a lot of smart people are buying calls while the stock price is going down, then that could mean that the stock price is potentially going to recover. And that gives us a signal that we can probably buy calls as well. And so that's sort of the basic idea behind how to use AlgoFlow. We'll dive a lot deeper into different strategies. So this in front of us is the AlgoFlow for SPY for just 1 minute. So 1 minute granularity gives us 1 days of data. 5 minute gives us about 5 days of AlgoFlow data. 15 minute gives us 15 days, and 30 gives us about a month and a half or a month of AlgoFlow data. And if you want to make short-term trades, or if you're an intraday trader or a scalper, then you obviously want to use the 1 minute AlgoFlow, because this line is showing you the sentiment of options traders at every minute of the day. You can see this is the day's time, and each point is a single minute. And then we have the intraday stock price as well. So if you are a short-term trader, then 1 minute is something that you can use. If you are a short-term swing trader, so let's say your time period is about 3 to 4 days or a week, then you can also use the 5 minute. If you are a slightly longer-term swing trader or an investor, then you can probably start to look at the 15 minute and 30 minute as well. But mostly options flow works really well for slightly shorter term trades. It obviously works well for longer term trades as well, but we at Tradytics mostly use the 1 minute and the 5 minute, and then we also sometimes try to use the 15 minute as well. So let's just open the 1 minute pack. So let's talk about some strategies now. So there are two types of strategies with the AlgoFlow tool. One is called Divergence Strategies, and the second is called Continuation Plays. First, we are going to talk about Divergence Strategies. So divergence is when the stock price and the AlgoFlow is going in completely opposite directions. So when the stock price was sort of going, it was going down, but it was not going down at the rate that the AlgoFlow was going down. You can see this large distance between the stock price and all right, there we go, right? So you can see this large distance between the AlgoFlow line and the stock price, and that's what we call our divergence. If the stock price was going if the stock price was going up while the AlgoFlow was going down, then that would even be a better divergence, but as long as there is distance in this chart between the price and the algo, we have a divergence. And whenever we have a divergence, we expect that divergence to fill towards the algo line. This is important. Algo flow is supposed to be a leading indicator of price. So if algo is going down but price is staying the same or is going up, then we expect the price to follow the algo, not the other way around. Obviously, it is not perfect, and sometimes algo actually catches up to the price, but mostly you'll see that the price is going to catch up to the algo, and that's sort of the beauty of how simple it is and how well it works. So this was obviously SPY. You can see that at the mid of the day, the price actually came back all the way down and sort of removed this divergence. So whenever the price actually comes to the algo line and completely removes that sort of distance or that space, we call that a divergence fill, or we call that a convergence. These are important terms that you'll see us mention on Twitter or on other social media platforms, so you should know them. So this point is a convergence point. And as soon as convergence happens, we are supposed to just exit our play. So let's say we entered puts here. We would exit our puts here because now we have completely converged. We are going to wait for more plays, and we are going to wait for, let's say, more divergences to appear before we can actually make a play. So that's again the basics of how to play divergences. Now, a very important point that I need to mention here is the algo flow for indexes or for indices versus the algo flow for individual stocks. So for indices like SPY, QQQ, IWM, algo flow is quite often used for hedging purposes. So if someone is buying a lot of puts for SPY, they might actually have a large shares position where they are bullish. So they might have bought a large amount of shares, and they are buying those puts to hedge against their bullish position. But since AlgoFlow is based on live options flow, those puts bought might actually make the line go down. Which is why for indices or for indexes, you'll often see that AlgoFlow does not do very well, or sometimes it actually goes in complete opposite direction to the stock price. And this happens quite clearly on larger time frames. On the 1 minute time frame, it still works quite well for intraday trades, but on longer term time frames, you can actually see that there is always this divergence. The stock price keeps going up, the algo line keeps going down, and that's actually good for us because that is telling us that people are still bullish on the stock and they're just buying a lot of puts to hedge their position, which sends the algo down, but that's still a bullish sign just for these indexes such as SPY and QQQ. If this was happening for an individual stock, then based on our experiments in the last couple of months, we would hypothesize that a price is going to come all the way down from 468 to 460 to converge here, because algo is telling us that people are bearish on the stock and the price is going to follow the algo. But I just wanted to mention, because when you start using the algo, you're going to see that on larger time frames, the algo doesn't work that well for SPY and QQQ. On 1 minute, it still works quite well, as we can see here. But just know the reason of why it's not working. Now let's actually try to sort of dive into individual stocks and see how well it works. So the first one we are going to open is the AMD stock. And with AMD, we are going to talk about the second kind of plays that we can create out of the AlgoFlow tool. So I'm going to open the 5-minute chart to just explain how do you play this. So the first kind of plays that we can make using AlgoFlow is the divergence plays. But the second kind of plays that we can make are called continuation plays. And those plays happen when the algo and price keep going in the same direction. So AMD is just an excellent example of this. You can see that from November 2nd onwards, and I believe even before that, the price and algo has been going up in a straight line together. And when that's happening, that means that price is increasing and options traders are quite bullish as well. So when that happens, we expect continuation in the trend. So let's say the price was going up and the algo was going up as well. We just expect the price to keep going up until there is a divergence in the algo flow. And you can see that lately, I believe on November 5th, we actually developed a divergence. But this is a good divergence. This is a bullish divergence for us. And I'm going to post this video today, and eventually we'll see whether this divergence pans out or not. But you can see that the algo kept going up, but the price dropped on November 5th, and now there is a big gap between the price and the algo. So we are expecting the price to go from about 130, 135 to about 140 or 138. So let's see if that actually pans out or not. And that's our setup. We have this divergence right here that we can play. So we enter, let's say, around here, and as soon as the price reaches this line on this chart, we are going to exit our calls and hopefully take our profits. So that's how you play divergences, but I wanted to actually talk about these continuation plays. So this would actually be both a divergence play, but this is also a continuation play because the algo keeps going up on a longer time frame. The price actually keeps going up as well. So we are bullish on the stock, and when we have this small divergence, we want to just sort of go in. So that's an example of a continuation play. This can also be very useful for breakout. So if the algo is going up, the price is going up, and it is about to break out, then you can probably know that there is going to be a valid or a legit breakout, and there is going to be follow through because options flow is also supporting that breakout. But let's assume the price is going up, it is about to break out while the algo is going down, then you're going to know that the breakout might actually not happen, and you should be cautious during your breakout trading. So that's one example. Let's try to discuss a couple of other examples. So the next one that I'm going to open up is Microsoft. Alright, so this is a decent one. So on the 1 minute chart, again, 1 minute is mostly used for intraday trade or scalping. So in the 1 minute, you can see that price, algo, and both algo and price was a bit choppy. And about midday, you can see that the algo just kept going up. And when it started to go up, it created this beautiful divergence. Obviously, the divergence was here as well. And now let me show you something. So you can see that the algo went, the low of the algo was about this point, right? The price did not drop to this point at the start of the day, although the low of the algo was this. Now, if you go sort of through this price, you can see that eventually the price dropped close to this level, right? But at that time, now that this was a convergence of this divergence. It took some time to pan out, and so anyone who was bearish here actually probably got their profits here, right? Because this was like a $2 or $3 move intraday. But at this time now, there were more options traders that had gotten bullish. So they started to sort of go bullish around here, and you can see the price just kept going up. And if you entered, let's say, around here, then there was this huge bullish divergence that actually panned out in the next couple of hours. So this was about, let's see, 334 to a high of, let's see, 337. So again, a $2 to $3 move intraday, and we did not completely converge here, but you can see that we still made a $3 move. So that would have netted you decent profits, let's say, on weeklies or on slightly longer term calls. But as you can see here, the 1 minute, since it's for intraday trading and scalping, there is a lot of noise here. So what you usually do for short term swings is you go to the 5-minute time frame. And on the 5 minute, again, you can see, look at this beauty. So the price was going up, but the algo was not going up with the price. And the price actually dropped right to the convergence point, or right to the point where it converged, and then it started to go up again. But on a slightly longer term time frame for shorter term swings, we still do not have sort of a bullish algo. So we need to be cautious here if we want to go bullish, or if we want to do a swing setup for calls, let's say, because the algo is just not supporting the price right now. Now, I want to mention the limitations of AlgoFlow here again. AlgoFlow is just based on live options flow, and any limitation that's there in the live options flow tool is also going to be there in the AlgoFlow. So let's discuss a couple of other plays now. All right, so I'm going to open Scare now. So obviously I'm cherry picking most of these plays because these happened last week, but we are posting this video in public. If you go to the website and if you go through a bunch of AlgoFlow charts, you'll actually realize that these are not really cherry picked examples. AlgoFlow actually works quite well across a wide variety of stocks, and you'll be able to find a lot of profitable plays with it. So this is the Scare 1 minute chart, and you can see that for a minute the AlgoFlow went up, and let me show you something beautiful here. So this was a quick 1 or 2 minute scalp. The price was down, the algo was up, and you can see that in just a couple of minutes we completely removed that divergence. Price went to 255, and then you can see at this point algo had started to go down. The price started to go down again, and this is where I say the price is supposed to follow the algo, not the other way around. And you can see that happening right here. So these were like in just the first 20 minutes we had two beautiful scalps. Then you can see that here we had this beautiful divergence again. You can see that this was quite alright. So this was a divergence as well on the 1 minute chart, and you can see that this converged as well. So again, a pretty nice example of how price goes in one direction but algo is going in another direction, and that eventually leads the price to go in the algo flow direction as well. Now, while we are talking about these good examples, since I mentioned the limitations of AlgoFlow, I'll show you an example to illustrate that, because I feel like with these videos we mostly cherry pick the good examples and don't show the bad ones, and that sort of sets an incorrect or sets a wrong precedence of what a tool is capable of, and what limitations does a tool have. So for this one, you can see that the price kept going up. The algo was not following the price well. It was bullish, that's why the line is green, but it wasn't going up in as strong of an uptrend as the price was. And you can see that at the end of the day, the algo actually gave up. The algo flow completely gave up, and it just shot straight up to the price. So although there was this divergence here, again, the algo was still bullish. Although there was this bearish divergence because the price is supposed to come down, the algo was bullish. So that's a small sign that since overall the net flow is bullish, although there is bearish divergence, let's wait until the algo actually goes below this baseline, which will make it a bearish algo flow, before we actually buy puts here. But this is an example where the algo flow just completely failed, and it followed the price and not the other way around. And you can see that here as well. There was this beautiful bearish divergence. Now here on a swing setup, there was this beautiful bearish divergence, but it did not pan out at all, and the price now and the algo had actually the algo had to catch up to the price. So this is an example where the algo flow did not work, and I believe in these videos we should always at least discuss some of these examples just to sort of set the right precedence. This is an absolutely wonderful tool, but obviously it has its limitations as well. Let us discuss two more examples, and then I'll end the video with a couple of tips and tricks that I have personally learned using the AlgoFlow. We are going to talk about Amazon. This is again a good one because you can see that the algo this was the top of the algo, and this was the top of the price as well. So that's good, but then you can see that the algo came down and the price eventually came down as well. At the end of the day, you can see that the algo went straight up again, so we would expect the price to open up slightly higher, let's say the next day. On the 5 minute, this had a beautiful convergence here, convergence and divergence. So you can see that this again, 5 minute is used for swing, so you can see that this was a pretty nice bullish divergence. I'll go, all right, this one. So you can see that the price was going down while the algo was going up, and as the price started to go up, the algo shot up. So the algo was always trying to lead the price, which gave us a move from 3300 to about 3400. So that's $100 move for a swing setup, entirely anticipated by the AlgoFlow tool. And you can see that it keeps happening. So price came down, it came down for a second, but then it shot straight up again. Price again had to follow up. So look at this beauty. So this was the top of the AlgoFlow, and this was the top of the price as well. So again, we want to find these large divergences, we want to play them, and we want to obviously make money. Let's discuss one more before I'll talk about some excellent tips and tricks that you can use to actually make your plays have a higher probability. This is a good one as well because obviously the algo dipped down, but as the price was recovering, the algo shot up quicker, and the algo sort of went way above compared to the price. And you can see by the end of the day, we actually had to go up, and we are almost converged here. So from this bottom, you can see that we have continued going up because the algo was always leading the price to the upside. Let's see if we have anything on the 5 minute. We do actually. So this when this spike occurs, and when you have a lot of spikes and then a straight line, then a spike, then a straight line, that's what we call a staircase formation. That just means that if the line is not very smooth, there is not enough flow data out there to create the algo flow. If there is a very hard staircase like formation, then we sometimes want to ignore those because there's just not enough flow data out there. But as long as there is some smoothness in the line, we are probably okay. So you can see that this was a huge bullish bet made by some options trader, which was caught by the algo flow, which made it sort of go up quite a lot while the price was still in a consolidation phase. And you can see that the price from this point in time has completely sort of shot up and gone from 20 to about 22 to complete this massive bullish divergence. And so that's sort of a more extreme example where the divergence is just too big and the price goes all the way to the algo point to actually converge. So those were just some of the examples of how the AlgoFlow tool works. What are some kind of plays that we can make on top of these AlgoFlow tool. Now I'm going to talk about some tips and tricks that you should use before you make this play. So let's open Tesla. All right, so this had a choppy price action. Let me see if there is anything. This is not a cherry picked example. I'm doing it live with you guys. So let's see if there is anything. All right, so this was good. You can see there was this bullish divergence that gave us about a $50 to $60 move. So when you are trying to go into these setups based on the algo flow, there is one thing that you should do, and you should stick to it when you're using all our Tradytics tools, and that is to find confluence. So as we say in our different sort of social media posts or in our blog posts, confluence is the name of the game. When you're using a service like ours or any other service on the internet that has options flow, that has signals or alerts, you always want to find confluence. You want to make sure that it's not just one thing that's going into your favor. There are multiple things that are going into your favor. And we have a bunch of tools that can help you find confluence from this very chart that you're looking at. So the first one is this volume profile. And if you know a little bit of technical analysis, then you would know that when we are going above a large volume shelf, that can give us a support region right below the volume shelf, and that provides us a good bullish opportunity. So you can see that we have this volume shelf here. This is a large volume shelf. When we short above it, that would have given us a decent entry. But at that point, there wasn't an algo flow divergence. So maybe around here we had this volume shelf right below the price. So maybe here we had this large divergence. We probably could have gone in. So always try to find these little technical analysis based confidence factors or any other confidence factors before going in. Another excellent way is to actually just click on our SR levels and play these levels. So when the price came down, if there was this, okay, so this is a good one. We had this support level at 1154. When the price came down, the algo was not budging at all. The algo was expecting the price to reverse, which is why it stayed constant. And you can see that we actually reversed. So you enter on the support level and then you just exit, maybe close or at the next resistance level. Or you had a resistance level here, you could have exited here, or you could have waited until we actually converged completely here. So there are all these tools, and now we have these sweeper levels, which these levels show you the largest sweeps over the last couple of days or months. I don't know why we are not. Okay, so these are the good ones. You can see that these are all the largest sweeps, calls on bids or calls on asks, puts on bids and asks, that can give you sort of an idea of where these large sweep orders are coming. So let's say we are going up, let's say we are here, and there are a bunch of sweep orders coming for, there are a bunch of call sweeps coming for out of the money call options. That can provide us an indication that these large sweep orders are also expecting the price to go back up. Then we also have these dark pool levels that can act as, let me just clear it. These levels can act as good support and resistance levels as well. And so that's it about the AlgoFlow tool. We have a bunch of obviously you can do a lot more technical analysis on our stocks dashboard. So I'd highly recommend you try that, because the more confidence factors that you can find for your plays, the better the probabilities are going to be for your trading system or for your trading strategy. So please do that. Don't just rely on a single tool. Always have a couple of things going in your favor before you actually go into the play. AlgoFlow, these divergences you can find. We have a scanner for all of these divergences, and that's in Flash. So you can find all the bullish and bearish AlgoFlow divergences on the 1 minute chart. We'll add the 5 minute as well, right in this Tradytics AI scan table. So we have these bullish divergences. We have a bunch of bearish ones as well. If you spend a lot of time in Discord groups, then we do have a version of AlgoFlow via our Discord board as well. So if you just type the tr AlgoFlow command and let's do spy, then you are going to get the sort of a very similar representation that you saw here. So give me a second. So this is the 1 day or 1 minute on the website, 1 day on Discord. This is the 1 day spy. If you want to get a slightly larger time frame, then you can do spy, and this is the number of days. So let's say we want to see the AlgoFlow for 5 days. This is what you're going to get. All right, what else? Give me a second. And lastly, we actually wrote a very detailed blog post on what the AlgoFlow is and how to best use it. And there are a bunch of examples that explain things really well and in a lot more precise manner than this video. Obviously, I'm not a native speaker, so the voice is slightly strong. So I apologize for that. If you don't like the voice, just go to this blog post. It's a really detailed blog post that goes over everything that we have discussed in this video. You can find it on our Tradytics blog. And so that's it for this video. I hope this is useful, or at least this gives you an introduction to what the AlgoFlow tool is. How do we find divergences? How do we play them? What are some kind of plays that you can make from the AlgoFlow tool? And I hope this helps make your trading better, and I hope this helps sort of get you more money from the markets. Thank you so much for watching this video. I'll see you guys in some other video.